In today's video, I'm going to teach you how to use Stockcharts Market Breadth. Market Breadth helps you understand the overall participation behind a market move, not just what a few large stocks are doing. On stock charts, you can quickly view breadth indicators to see how healthy or weak a market trend really is. Start by heading to stockcharts.com. On the homepage, you'll see a prominent search box at the top. You can type a symbol directly if you know it, or click into the symbol catalog to browse by category. The catalog is helpful if you're not sure of the exact code or want to discover related indicators. To pull up the classic advanced decline line for the New York Stock Exchange, type NYAD into the search box and hit Enter. This line tracks how many stocks are advancing versus declining over time, offering a broad read on internal strength. If you want to gauge how many stocks in a group are on point and figure buy signals, use a bullish percent index like BPSPX for the S&P 500. For a look at new highs versus new lows, try high-low percent, such as SPXHL. You can also explore AD volume percent to see whether volume is flowing into advancing or declining stocks, which adds a conviction layer to price-based breadth. Once a chart loads, adjust the time frame to match your goal. Daily charts are great for near-term swings and tactical decisions. Weekly charts smooth out noise and highlight intermediate trends. Monthly views show the big picture, which is helpful for long-term investors who want to confirm the health of secular moves. Switching time frames on the same symbol can reveal whether short-term pullbacks are happening within a stronger, longer-term trend. To make noisy breadth data easier to interpret, add a moving average overlay. In the chart settings, choose a moving average and set a period that fits your style. A shorter average, like 10 or 20, reacts faster and is useful for timely signals, while a longer setting, like 50, filters more noise and emphasizes the underlying direction. Apply the same logic across indicators. For example, a rising moving average on NYAD supports the idea of broad participation, while a rollover can warn that fewer stocks are lifting the index. On high-low percent, smoothing helps you see if new highs are expanding or fading consistently, rather than reacting to one-off spikes. If a symbol doesn't appear, return to the symbol catalog and confirm the code, or browse the breadth section for available indexes. With these tools, you'll read market participation clearly, align your time frame with your decisions, and let overlays keep your analysis focused and objective.